Hi, and welcome to the Market Alert for Friday the 20th of March 2015. And today's Market Alert is going to be slightly different. Earlier in the week I spoke about the new indicators that I was working on as the markets have changed over the last few months. Well, today we're actually going to release this version. It's still, I would say, a beta version of it, but I would like you to actually have this before it's totally complete so that you can actually have a play with it and see how it works. Now, for months I've been banging on about how great the psychological lines are inside of the Dow, how the market trades to these grey shaded areas. So the first thing I did was have this programmed into the software, and under support and resistance on the left hand side here you can see we've got show psychological lines and then show as lines. And when you do this, you can see now we have further options. We've got the major lines, which is the big round numbers, the minors, which are 50s, and then you've got the divisions of 25, 50, and then 75 as well. So I'm going to left click on apply, and now you can see that these have been added to the chart. So immediately, by having this color coding, I can see whether we've got, I'm just going to narrow this, we've got a big round number in this case. You can see there the red line is 18,050, and then down here we've got 18,000 there on the blue, and then of course we've got 17,950 there. So you can see immediately in between these lines you can see that there are further divisions, and they're all 25%, well obviously 50 and then 25 either side. And now, as you look at this chart, you can see why the market stops where it does. So, for example, if we start on the left, you can see the market trading down to this level here, the 75, coming back up and then trading and holding on the 18,000 there, and then going through, and look where the market stops here. It goes through to 75% through from this line to this line, then comes back, goes through, comes back to 50% to this, back up to this one, back down 50. The market holding here and trading up to here, and you can see how even during the quieter times the market holds around these quarter, half and 3/4 levels. So they go back up to 3/4 there, then back down, back up to 3/4, back down, holding there. So an incredibly powerful set of lines. And not only does this allow us to see where the market's going to move to, when you're actually in a trade you can use these as the next profit target as well. So a great new feature to the software. And again, if you're coming down into settings, you can see on the left there we've got show as lines, and then you've got major lines, minor lines, and again you can change these to the colors that you actually want. You may prefer the major lines to be red and the 50 in blue, which is what I would personally prefer. That way I can see that the red ones are the major, should be alerted to the fact that the market could find support, and then the minor ones in blue there. So that's the color scheme for that. So red for major, blue for minor, and then the other ones I've just got as a simple grey. I've just changed that to grey there. So they should be the default colors for yourself when the software is released though. Okay, so that's the first part. The next was to actually highlight these areas when the market actually closes through these, so that we can see if there's a potential turning point. For example, we see the market coming back through here and through here, so we want to be able to take advantage of that. So if you go into the PPT indicators, you will see a new one called PTI settings. Inside of here you've got it looks exactly the same as the XXX and the PTP as well. So when it comes to marking up the trade and executing the trade, everything is exactly the same. We've kept it really simple. So first of all, we need to show the PTIs. They are the psychological trading levels or psychological trading indicator. And again, you've got the options to show major or minor signals. If you don't want the minor ones at the blue, then you can remove these, and conversely the same with the major ones as well. On the show only signals with a bar range of at least, we've now put this into the same indicator, whereas before if I just scroll down, there used to be a global setting for this, which was here in the trade calculation, the trade markup area, which now has been removed, and you can find this setting inside of each of the settings, including the triple X's and PTPs as well. So they're more local now as opposed to global. So for the PTIs, I'm using at the moment 25, not greater than 25, and not less than 5 there to actually produce the signal. Also got this apply low volume filter. I have that removed at the moment during the testing phase. That has been removed. And then this bit in the middle here, we've got the option, because in combination with not only closing through these, I've actually modified the parabolic as well, so you can see just by the color of the parabolic whether the market has momentum as well. So I'm just going to click this so you can see what it looks like. Now, you don't have to have this on the chart. It's just in there for those of you that want, and I'm going to actually do a separate video about the parabolic in the next couple of weeks. So for the time being, I would actually have this turned off, and that way it just keeps the chart cleaner. So that's the settings as far as the PTI is concerned. The trade calculation, and we have to scroll down till we see PTI, which is around here somewhere. So on this one, I'm using the normal 50% to get in, and something again I've spoken about in the last few weeks about letting the market breathe a bit more. I've increased this to 50%, and the reason for this is, if you look at this particular one here, this green triangle, this is how the PTIs are displayed on the price chart. If I'd have gone the normal 10% there, I would have been taken out, but you can see how this line here became a support area for this market before going on and heading back up towards the big round number there of 18,000. And the same here, you can see how it's finding support, but again it came down to here. So by having the stop a bit further back is allowing the way the market's changed at the moment to breathe a bit more before going off in the right direction. And bearing in mind that yesterday it was an incredibly quiet and sideways trading range there as well. So the initial stop is 50, and the scalp line is still there. But like I say, what's a great feature of having these psychological lines on, and the power of them, you can actually use these as the next profit target, so thereby increasing the potential number of points in a trade as well. You can see there how the market's come back, and it's traded up to 3/4 between here and here, and then stopped. So as the market's struggling in this area, you can then make the decision on whether you want to take the money or not, or see if the market's going to go up to the next one. See it coming back there, stopping at 3/4, and the same through there as well. But a very quiet range yesterday. I mean, bearing in mind now that you can just look at the chart and you can go, there's 50 points between here, 12.5, you've got 50 there, and then the same through here. You've got each increment is 12.5 points basically each line as the market moves. So you've got 25 points there, and then 37 there, and 12.5 at the bottom. So you can see immediately where the market's trading and the number of points that are actually available. So the same principle for these as with all of the other indicators. They appear as just the outline of the indicator to begin with. The red ones are obviously for a potential short, and then once the order is filled, so let me just mark up under the PTI there. You can mark up the trade manually, so you can click in there, and you can see there the market filling this one, coming back up to this psychological level here of 18,000 before then trading down to here. And again, you can see because of the psychological lines, we've gone through 3/4 to the downside, the market there finding support, and then trading just below that before coming back. So again, giving you a good indication, again removing that emotion by being able to watch where the market is going to trade to. So the same principle, clear signal to begin with, filled with a lighter red when the order is or the market goes through the entry price, and then when the scalp target price is hit, it turns to the dark color, in this case red for the short, and then conversely for the upside you've got the green ones there as well. So as with all of the indicators, you can see when the market actually fills, and also when it goes to a dark color, that the target price was hit. But again, just to remind you that you can actually make more out of the trade purely and simply by using these smaller increments in between the major and minors to actually maximize the profit. And yesterday was a quiet trading session there, as you can see, just not even 50 points after the initial move down by the market, which is why the PTP triple X's there, or just the PTP triple X's as well, there's one there, struggled yesterday because there was no momentum to move the market back, whereas by using the psychological lines we were able to get into the actual trade and then just trade it up using those lines as a way of measuring the momentum in the market and using the upside psychological levels as potential profit targets. And just a quick look at the results over the last few weeks. I haven't included yesterday's yet, but for more or less the last month, you can see there you still get losses, but the good news is overall so far with the scalp it's 207, and then with the trailing and using the profit targets for the last month is 405 there. So a lot better as far as profits are concerned since the markets have changed. So a lot of work's gone in to actually adapt to how the markets change, and I am constantly working on this. I've been working on another layer of indicators this week as well, which will be behind the scenes to add even more trades as well, so that we can actually flow with the market sort of as it changes really. And that's one of the things that it's strange, because you can have something that works fantastically for years, and then something changes in the market. And of course we're in a period at the moment where the Fed doesn't know whether it's Christmas or Easter. They don't know whether to increase rates, reduce rates, or what to do, or print more money. So the market changes, and it's those changes we've got to try and adapt to. And one of the great things about the psychological levels is that we can see what the market is actually doing by overlaying these levels now, and then dividing these levels as well where midline, and quarters as well. We can see exactly why the market does what it does, and it isn't just exclusive to yesterday's trading session either. You can see there how the market's trading up and down to these lines, and once you get used to these on the chart, you won't be able to trade the markets without them. So here's a few trades on this is of course Wednesday before the Fed came out. You can see there's a few points with the PTIs, which are the triangles. Let me just make things easier a bit for you here and just turn off the triple X's and PTPs as well, so you can actually just get a clearer look at the new ones there. And you can see where the market traded down to. You see that trading range as the Fed. That was 19 points, by the way. It came close to actually hitting the scalp. But again, if I just drag the chart over to the right so it expands this a bit, you can see where the market stopped. It stopped at 3/4 of the range between here, and then the same there again. Then it came down to the minor range there, the blue line, and you can see how the market just holds these levels, and then again coming down, trading lower down to the next major level before the market just exploded with the Fed. But late on in the session, where we didn't have any PTPs or triple X, on this occasion we had a nice bit of a move to the upside there. But as I've said all the way through, these lines are extremely powerful, and you can see where the market's trading to, where it's holding, and then the effects after. Of course, as with all of these things, you still need the momentum to move the markets. So that's about it really for the new indicator there, the PTI, the psychological trading indicator, and just bringing it back to yesterday there. And if you have any questions about this, then feel free to contact a member of the support team. Like I say, it's in its infancy. There's a lot more to come in the future as well, to more refinements to remove some of the losing trades. I've gone back and had a look where they are on the chart, and finding ways that we could have actually removed that one from the trading session, which is also looking very good as well. But so that's going to take a few more weeks before I can put that together. This has been quite intense up to this point in the last 3 weeks of putting this all together, but so far so good. And like I say, it's will be available later today for you to actually download and have a play with, and that's what I would suggest you actually trade it on paper or something like that to begin with, just to get used to the lines, the feel of it, the look of it, and how it plays out in real time as well. Right, that's it from me this morning. Let's just have a quick look at the news for today, just see if there's anything to affect the market. There's absolutely nothing as far as major impact news items are concerned. FOMC, Lockhart is going to speak at 2:20 and 3:30. Evans is going to speak, so it could have a bit of an effect on the market. But yesterday the market not doing an awful lot following Wednesday's decision by the Fed to hint that rates may go up. I don't believe a single word of it. I can't see how they can, but that's another story. And a quick look at the daily chart. Prices there doing a small reversal on Thursday, which is not uncommon, but of course we saw most of that in the first hour, and then the market trading sideways within a 50-point range for the remainder of all afternoon and evening as well. So again, as I said earlier, the markets have changed and are changing or going through some sort of evolution at the moment. And finally, let's just have a quick look at the implied volatility. Let's just refresh this from yesterday, 12.18 yesterday, and we're down at 12.34, just up slightly on Wednesday's session there, because obviously the market moved lower in the first hour during yesterday. Right, that's definitely it for this video. I will see you in the next edition of the Market Alert. As ever, thanks for watching. Have a great weekend, and I will speak to you on Monday. Thanks for watching.